Okay, now for this week's Dollar Dialogue, we're speaking more on some of the contentious tax changes raised out of last week's federal budget. And someone that has some serious concerns about how the reforms to capital gains tax could impact younger savers and investors is federal Independent MP Nicolette Boele, who joins us now. G'day, Nicolette. Welcome to the Savings Tip Jar.
Thank you for having me, Don and Denise.
Great to have you. And before we start, we're going to do the traditional thing and ask you, Nicolette, for your savings tip.
Yeah, I can't not do this because of my background in energy and finance, and it's a savings tip around energy. So the Australian Energy Market Commission introduced something called the best offer. What that means, every quarter on your energy bill, energy retailers have to tell you what the best offer plan is. And people have written into me and said, thank you for letting us know this tip, because people are actually saving, upward of $150 a quarter just by switching plans from within one retailer.
Wow.
I did not know that.
Yeah, I was going to admit that I wasn't totally aware of that one either. So that's something I will probably look into for my own personal situation at the moment, because those energy bills are certainly really starting to bite at the moment. So that's a great one. I haven't heard that one on the pod before. Thanks, Nicolette. Getting into the nitty gritty. First up, the federal budget has been sold as making changes in the interests of intergenerational fairness. Is that how you see it?
Well, yes and no. I want to say that it is pleasing to see that in the second term, in its second year, with a large majority, the government's giving something a big, hard go that I think most parliamentarians and politicians run scared at, and that's tax reform. But I have to say, after surveying our community around capital gains tax, would they welcome a change, particularly to try and level the playing field so that, first home buyers aren't unfairly advantaged when they go to an auction and they're competing against property investors, for example. There was a huge 2/3 of people supported changes to level that playing field. Another 11% said they'd be open to it, as long as it's in the context of broader tax reform. But what we saw in the budget last week, it just felt like it didn't feel like something that was targeted at housing only, when we've got these CGT changes that go right across all the asset classes. And I'm someone sincerely committed to improving productivity in our economy. I got to ask, why create all these headwinds for small business and startups and even renewable energy infrastructure when, if it is an intergenerational equity, if we're genuinely trying to get young people into homes, we need a really productive, vibrant economy at the same time. So it's a yes and a no. I think the execution around this has a lot to be desired.
Okay, so what is it then that you would like to see changed out of what we've heard from the federal government so far?
I think my community, who is writing into me every hour, I'm getting this is Sydney's North Shore. It's quite an economically good place to live, if you like. We're very outward looking, but people want their kids to be able to afford places here in the community where they grew up. It's a great place to raise your kids in fantastic schools, aged care facilities and hospitals and whatever. I think if we can ring fence the CGT changes around property, I think you'd get, there's some winners and losers, but broad support. But we need to just take a deep breath and let's have a look at, let's consult, and let's put those impacted people around the other changes on asset classes, like young people who are using exchange-traded funds to save because they can't save up enough. They're young. You want to take risks. You're not going to put your money into a 2-year bond right now. You want to put some of that into stocks, take some risk. Those people need to be consulted. The Treasury needs to do some modelling. And if it really is such a good idea to pull back the discounts on CGT for these other asset classes, then why doesn't the government take that to the next election and get a mandate to do it?
Yeah, absolutely. And that's something that, like, a lot of younger savers, we're constantly told you have to do the right thing. You need to save and you need to invest your spare funds. It's while you're young is one of the best times to do it. You've got more time on your side to ride out the ups and downs. It's not like you're just before retirement. And yet I think that's why younger people in particular, are taken quite aback by these changes, because I think they were happy to see them applied to housing. But seeing it applied to like things like shares and even small businesses, is certainly hurting them at the moment. But yeah, you mentioned that the giving people the opportunity to give the government a mandate. That was actually something I was going to ask you about, this sort of question of integrity here, because the government essentially broke its promise to not make any property tax changes. And yeah, I just think that if you are going to go against your word, at least propose the legislation just before an election, so that, yeah, like I said, you're giving the public an opportunity to mandate those changes. So yeah, can you just expand on that?
I don't disagree with you. On one hand, sadly, I think most people don't expect parliamentarians or politicians to keep promises. That's not unfortunately, that's not a thing. And it does take guts to say, hey, I was wrong. And maybe the situation or the environment's changed, and we have to be nimble and change. But the fact that we have rising inequality, that young people can't get into homes, is not something that happened overnight. This has been going on for decades and decades. It's the red and the blue team over many successive governments that have failed to understand just how important to our whole economy and to, frankly, future generations, that we give people the opportunity for secure shelter. Just how important that is to get a home so that you can, have a shower before going for a job interview, get your job, raise, have income, raise a family if you want, put them in a local school. Like, that's not nothing. That is the backbone of what it means to be, have a meaningful contribution to life. And yet for so many young people, it's so far away. And so I am pleased that on this occasion, they've had, frankly, the backbone to take on this issue around the inequity between first home buyers and probably property investors. But by and large, this government isn't the best at communicating. I feel like they haven't done the appropriate consultation to bring people along on it. I don't even think some of these things have been, frankly, modelled by Treasury. So this is the opposite of how you get tax reform and bring people along. And I think they've got a lot more work to do to get this right.
So, okay, let's just say housing is going to stay as it is. Do you really think there's much of a chance, or do you see this government sort of watering down or being prepared to, nibble around the edges and consult with people to have some changes of what they've announced? Is this a feasible thing?
Yeah, at least what I've heard so far, which also goes to the fact that if they'd consulted properly, they wouldn't be sort of flip-flopping here. But I have heard, within 24 hours after the budget, that they are willing to consult with startups about the impact on that particular, asset group. Because, there's a lot of sweat and tears that's taken in equity there in terms of stocks and stuff that are held for a long time and not realised for sometimes decades. You just can't throw a capital gains tax change to that, because it doesn't back the small businesses and those innovative companies that we want on the world stage proudly as Australians. There's tech companies, there's medical research, there's a whole lot of those. So the fact that they're engaging on that says that they are willing to do that. There's another niche area around changing the capital gains tax on international investors in things like renewable energy infrastructure. 3/4 of the money that goes into big scale solar farms, for example, comes from overseas, particularly from pension funds. And they want to not only change the future CGT treatment, but they also want to backdate it like 10, 20 years. That's like the opposite way that you attract investment into our country. So the fact that they are pausing on that and engaging, unfortunately, after the announcement, tells me that, yes, they are willing to try and get it right. But who knows? I go back to Canberra next week with 149 other people in the greenhouse. We'll see what happens, and it's got to go through the Senate. I imagine there'll be many changes. There aren't that many people who wholeheartedly love it, and I really do hope that the changes to the housing make it through, but it's going to take a lot more changes to have my support as it is.
Yeah, certainly there were a lot of concerns that the impact on people who that in that startup culture would send a lot of our best and brightest overseas, and we want people innovating, want people taking risks and putting their capital towards starting up a business. But like sort of we've discussed, it's younger people tend to be embrace risk a bit more, particularly when it comes to investing. And some people have said that these capital gains tax changes, for some people who are investing in maybe lower risk assets that have like higher dividend yields, the indexation to inflation method might actually result in less capital gains tax overall. But younger people that might invest in those riskier assets that maybe don't pay out big dividends and they're more chasing those big capital gains, they will be hit quite substantially by this sort of thing.
That's exactly
so
right.
Is this the government effectively saying don't take risks with your money to people?
That's a really interesting way of putting it. I think the fact that it's taken a dual path to how you can opt to tax, with the indexation but it's still ultimately a 30% minimum tax. So in some respects, it does. And I think that goes to where I think the government's missed this. It allegedly has tried to fix something around housing affordability and that intergenerational inequality, the fundamental aspect of giving people, reliable shelter for the whole economy to work. But on the other hand, they've just got this blind eye to all of those other assets that are hugely productive and contribute to our tax base as well in the future. And they just want to have this headwind for people to, as you've pointed out, Don, to, get in and take risks and take a go at starting a business, or in the case for young people where it's actually prudent that you do take, you always want to have a broad range of investments. I mean, get your own financial advice, everyone, but you want to diversify your portfolios. But when you're young, you should be taking, have higher risk sort of scenario. And you can't lock up a lot of your money if you do want to step into at any point. I had a 33-year-old wrote into me just this morning who said she's like ready, thinks she's ready to maybe try and go and bid on a place now. She's been using ETFs for a good part of a decade. And the reason she's done it is she couldn't afford to lock that up in a government or a corporate bond in case she found the place that she needed. So will she, if she's been doing 10 years, what's her capital gain going to look like? It's been a bit sluggy the last little few years, but before that, there's been, depending on where you're invested, she's going to be hit big time. So her ability to borrow when she finds that house will be diminished because her savings and her deposit will be less. I mean, fast forward 2 years, if that were the case. So I think, yes, it doesn't feel like it's engendering an appetite for competition, productivity. It feels like it's putting a handbrake on those productive assets. I don't think it's done it intentionally, but that goes right down to a crappy process where they just needed to have done the homework before they came out and announced the changes.
Yes, it did sound as though it seemed last minute, and they've even said publicly, both Jim Chalmers and Anthony Albanese, that the housing stuff at least was a last minute call. So you probably got some substance to your view on that. So I guess now it's over to Canberra, and we wait and see what happens when everyone goes back.
But I got to say on this one, and I know it's not housing, but if we just taxed our gas exports at 25%, and they brought that in 2022 when that red team took over, we would have $70 billion to probably help young Australians get into homes. So I'm just saying, on one side, we're looking at making all these changes, but they have missed out on so many low-hanging opportunities to raise more money from, giving us a fair share of what are our finite resources. I think that's a real missed opportunity.
Yeah, it certainly seems that judging by the reactions we've seen across the political spectrum, a lot of people are not too happy and quite dissatisfied with this budget. But as you said, sort of at the start, this government has got a big mandate, given their substantial majority to make some significant changes. And if they are going to make changes, you'd think now would be the time to do it. But at the same time, I do still think it's a bit unfair that they didn't propose some of these major changes just before an election so that you can essentially get the permission of the people to go against your own word. Nicolette Boele, really appreciate your time on the Savings Tip Jar podcast. Thanks very much for your insights.
Thanks. Great to talk to the savers.
Thank you.